Our panel is taking a look here at PayPal. Joining me now, Danielle Shea, VP of Options at Simpler Trading, and Stephen Bigger, Director of Financial Services Research at Argus Research. Thank you both for being with us. Your thoughts on PayPal here today, Danielle, which is down about 8%.
Well, when you look at PayPal, this is a stock that back in 2020, 2021, this was an amazing stock to trade and a great investment. But at this point in time, it just cannot get out of its own way. It doesn't matter what earnings they report, doesn't matter what news comes out. The stock just has so much overhead resistance that unless they can have a significant change and get up above $95 to $100 a share, the stock just has to remain on the do not trade list for me, because it just cannot get it together.
Understood. I mean, what do you think? I mean, the CEO did flag softening in spending in the United States. Stephen, are we worried about PayPal or no?
Well, Nicole, I think it's a familiar story with PayPal here that the branded checkout volume growth was a bit light. If it's 5% or 6%, it's not an enormous difference, but I think clearly the street, took that lower end of the 5% to be, a bit worrisome here. So, they have certainly talked about, and part of their strategy is to give up some of that growth for higher margins. So they've got some lower growth business or lower margin businesses like Braintree that are being, kind of de-emphasized, at least in the renewal space, and they've been focusing more on the branded checkout. So, they mentioned some tariffs impacting some of the international, particularly the Asia volumes, and so we can give them a little bit of slack. But at the same time, they beat by 10 cents. They guided higher by 20 cents at the low end and the high end. So they do expect kind of a better second half. And I think as we get through some of this tariff turmoil, you'll probably see a little bit of improvement. But yeah, at this point, the stock is really kind of a value story. I would say it's a show me in terms of getting that improved margin story together, and the stock is kind of wait and see.
Yeah, it's interesting because we saw earnings per share beat, total payment volumes rose 6% year over year, payment transactions declined, but I did see some positive thoughts pertaining to guidance, Danielle. Is it still a real viable player in the payment space as we look at the other names in this group, Danielle?
Well, you would think it would be, especially considering some of the numbers. But unfortunately, given some of the things that the executives have noted throughout this earnings report, anytime executives are mentioning tariffs or slowing growth this quarter in particular, these companies are getting hit. And so ultimately, when you look at the overall trend of this stock and compare it to the way that the indexes have traded and a lot of other names in this space, this ticker has remained a relative strength loser for several years. And so that's why when I'm looking at the long-term trend in this stock, for me, I just have to stick with it to the downside.
All right. So meantime, I mean, I did see in your notes you talked about MasterCard, Visa, also SoFi, Affirm. Quick comments on those, Danielle. You have different strategies here on trading these.
That's correct. So when you compare PayPal to MasterCard and Visa, Visa and MasterCard both have beautiful long-term chart patterns. They have nice trends. They have weekly squeezes. These stocks are setting up. They're consolidating. They're getting ready to go and break to new all-time highs. They also have bullish patterns where they trade higher going into earnings. And the vast majority of the time, MasterCard specifically trades higher after earnings as well. Visa can be a little bit hit or miss. Sometimes it's up, sometimes it's down. But with Visa and MasterCard both, they typically stay below about a 3% range. And the expected move in the options market is around 3%. So for that reason, with these stocks, since they are a little bit lower volatility, I typically like to come in and sell some neutral iron flies, selling the at-the-money calls and the puts, and buying some outer wings for protection to trade the overnight volatility crush and theta decay for the earnings week.
And we did see also, Stephen, you have a buy rating on Visa. You talked about the latest investor day that the company had, and they talked about folks spending, and you have a buy rating and a 395 target, right, on Visa, Stephen?
Yes, so I certainly agree with Visa. They've got a terrific growth story going. They tend to turn kind of high single-digit revenue growth into mid-teens earnings growth, and that's been so consistent over the years, that ability to, you think about what's going on in the payment space, just more and more transactions moving to digital, to card, from cash and checks and other forms. So it's just a great story for both Visa and MasterCard at this point. Consumers want to take advantage of rewards programs. Yes, MasterCard is the same, very similar story. The two of these companies have, 70% market share in the credit card space, and just very dominant, and also extraordinary margins, 60%, mid-60s for MasterCard, nearly 70% for Visa. So just cash machines, as they turn that revenues into profits.
Yeah, and we think about the buyback program. Is this an important part of the story, quickly, Stephen?
Well, absolutely. A lot of cash to return to shareholders in this case, and PayPal is sort of the same story. They do have a bit of an ace in the hole, I would say, with Venmo. Instant payments, very, very popular with consumers now. They're also adding the cryptocurrency payment capabilities, things that Visa and MasterCard don't really have a good offering there. So there's certainly playing catch up on the volume side and the margin side. But yeah, Visa and MasterCard certainly have everything going in their favor. High margins, good buyback programs, and just terrific growth rates.
Yeah, and look, I mean, the vibe is changing. It's not just consumers just spending. I mean, you have so many different things of scale in our society, whether it's digitization. I see this in your notes here. And Danielle, you're next, because I'm going to ask you about some of these things. But cybersecurity, AI adoption, and data-driven services, and ways that things can be differentiated with different offerings. So the payment space is not the days of old, but something new. A final quick thought, Danielle?
Well, I just want to point out that we have some newer names as well that are hot. I mean, if you look at SoFi, this one gapped up 8% after earnings this morning. This ticker has high short float, about 12%. So this can provide opportunity for traders. And then you also have Affirm. This ticker is not going to be reporting until the end of August, but it has a bullish pattern. It's consolidating. This provides opportunities for traders to come in and buy long calls before an earnings report. When there's excitement in a stock going into the earnings report, this provides a momentum trading opportunity and a directional trading opportunity, especially in some of these newer names.
All right. Well, thank you both so very much. Danielle Shea, VP of Options at Simpler Trading, and Stephen Bigger, Director of Financial Services Research at Argus Research. Great to see you both. Thank you.